Good morning to all of you and welcome to Union Bank's financial results announcements for the second quarter ended September 30, 2024. Thank you for joining us today. I trust you have had the opportunity to review the results, and I will provide a brief overview of our performance and key highlights for this quarter. Just let me touch upon the operating environment. Before diving into our financials, let's touch upon the operating environment. The banking industry has seen credit growth outpace deposit growth, creating a very competitive scenario for liabilities. However, the gap between credit and deposit growth is narrowing as per the latest RBI data. In the current rising interest rate environment, customers tend to prefer high yield term deposits over CASA deposits, which presents both opportunities and challenges. Now let's look at our financial highlights for the quarter ended September 2024. We have achieved our highest ever operating profit and net profit for a quarter. Our operating profit reached 8,113 crores, reflecting a 12.4% growth. Net profit stood at 4,720 crores, showing a 34.4% year-on-year growth. ROA has improved to 1.35 and ROE has reached 19.10 for Q2 FY25. Our capital adequacy ratio improved to 17.13%, with the common equity tier 1 capital at 13.88 for H1 2025. Gross NPA reduced by 202 bips to 4.36%, while net NPA was brought down by 32 bips to 0.98%. The PCR improved to 75 bips to 92.79%. Our cost income ratio improved to 43.56% for Q2 FY25, down from 44.08% in the previous quarter. Broadly, if we look at the guidance versus what our achievements are, deposits grew by 9.2% year-on-year and advances by 9.6%, where deposit growth is within our range of 9 to 11%. Advances growth is slightly below whatever we have targeted of 11 to 13%. In the advances segment, we have seen a growth of 12.3% in the RAM segment, while corporate lending was moderate at 6.3%. Our NIM stood at 2.97 for H1 FY25 and 2.90 for Q2 FY25, aligning with our guidance of 2.8 to 3%. The decline in NIM we will explain to you when we go forward. The asset quality continues to improve, with gross NPA reducing to 4.36%, aligning with our target what we had given to the market at 4% for March 2025. For Q2 FY25, gross recovery was close to 4,000 crores, which was lower than slippages of 5,219 crores, mainly due to, you all understand the reason why it is so. In the half year of FY25, we achieved a gross recovery of 7,300 crores, in line with our annual target of 16,000 crores. Total slippages are around 7,500 crores. That's the slippages that we have got. As per the guidance, we had given 11,500 crores for the whole year. We would like to now mention to you a little bit on our strategy and future action for the current year. We remain committed to sustainable growth, ensuring a balanced focus on both top line and bottom line performance. We will keep prioritizing profitability and efficiency over chasing growth at any cost. Our CASA and retail term deposit is around 72% of the total deposit, a ratio we have maintained consistently. In our advances portfolio, we target a retail to corporate ratio of 55 to 45, but for the current quarter, we are at 57.43. Let me give you a little bit on our recent developments, the good things that has happened in the bank. Ease ranking, we achieved the second position in the Ease 7.0 ranking for the first quarter. We ranked first under the theme Banking Towards Viksit Bharat, second in customer service excellence, effective risk management and developing employees for emerging banking priorities. In all these areas, we are at number 2. We have expanded our branches. 122 branches have been opened during the current quarter, and we have focused on 12 liability-focused premium branches at RUSU centers. We have also launched a separate project for CASA, transformation of CASA, and the business is building. We have also taken up many steps towards increasing our growth in our clientele. Up to September 30, we have added 3.48 million CASA accounts, and our YOM mobile application registration has crossed 29.1 million. Additionally, we have also onboarded close to about 1,23,000 clients through our digital savings accounts. Now, we have also created many digital journeys. We have introduced the PM Vishwakarma STP, KCC renewal, GST gain, and many more such STPs, which we will talk to you at a later stage. UPI enhancements, the bank has introduced the UPI interoperable cash deposits into our CRM portfolio. We have taken many CSR initiatives, you must have also seen in the press. We inaugurated 2 rural self-employment training institutes only for women in Mauganj at Madhya Pradesh and at Palanadu in Andhra Pradesh. Both are fully managed by women, and it will support only women entrepreneurs. We have also got rating upgrades. All rating agencies upgraded the bank over the past year. In FY25, S&P Global revised our outlook to positive with a BBB- positive rating, while in rating and Brickwork upgraded us by 1 notch to AAA with a stable outlook. We have also been added in the Nifty Next 50 index also. To conclude, Union Bank has consistently demonstrated strong, stable and sustainable performance. Our key initiatives including enhanced underwriting capabilities, centralization, verticalization and HR transformation and robust assurance framework are yielding positive results. We have significantly strengthened our digital capabilities through our mobile app called the YOM, digital onboarding, straight-through processing journeys, and many more such things. With that, we are now open to questions. Thank you.
Madam, this time this NII, it has declined marginally. And it is the second quarter actually. We have seen this happening in the previous quarter also. And I think this trend is visible, I think in the last, we have not seen this happening in the last, since 2022 I think. So what is the reason behind this?
See, you have to look at it, there is some in between, there is some regulatory changes also has happened, where earlier what we have been booking the penal interest has to be booked as a penal charges. So there is a 11 bips effect was there during that period actually. So, and the market is also that the deposit rates are little higher, whereas we are not able to get a high yield advances. Because advances is still the rates are very, very competitive. In fact, for that reason only, if you are looking at it, our corporate book, we are more or less flat, and we are letting go some of the low yield credit advances also. Only just that we can maintain the NIM. This we have anticipated in the last quarter of the last financial year itself. If you are looking at our guidance, we are very clearly, we've been telling that our NIM will be less than, this will be 2.8 to 3% only we are telling. So going forward, till the deposit rates are cooling down in the market, it will be a challenge for the banks.
What do you see going forward in next 2-3 quarters? Can we see this NII maintaining the same trend, or do you expect it to stabilize here and or maybe increase?
You're talking about net interest income. We were looking at actually the RBI was coming, we were having a strong feeling that, the repo rates would be cut and further the interest income would be coming down. But fortunately, RBI has not cut the rates and we're still maintaining the same repo rate. But one should understand that the credit growth has not been to the extent that what has been desired. Now, if you look at last year, the credit growth, average credit growth in the SCBs was close to 16%. Now it is moderated to about 13%, and we are at about 9.6%. We also envisage that the growth, capex growth would be there in this. From September onwards, there will be a good steady capex growth, which has not happened. In fact, if you look at our, as ED has already said, if you look at our advances growth, we have done well in the RAM sector, about 12.5% growth that we have had, but in the corporate sector it is muted growth that we are having, and we would have had a good NII if my corporate book had also grown. We had let go many accounts for the interest rate reasons that we were not able to grow the books. So going forward, we hope the capex cycle revives, and we will get back on our NII what we have want to envisage for the bank. Yes, ma'am.
I wanted to just take the question on corporate loans a little further. Is there any target, given the challenges that you just enlisted about the capex cycle not picking up, etc.? Do you have any particular target in mind for the growth in corporate on your corporate book? Apart from that, if you could enlist if there is an outstanding pipeline of sanctioned or disbursed loans that you could help for this FYP.
See, we had given a guidance of 11 to 13%, the credit growth for FY25. We have almost about 75,000 crore of pending disbursement and sanctions with us, and 39,000 crores are for pipeline for sanctions. We have visibly picked up many sectors which we are seeing growth, like roads, power, real estate, telecom, iron and steel, cement, and renewable energy, semiconductors, data centers. These are the centers these are the locations we are looking at, a good growth in these locations and these kind of sectors. But we have not seen that many big projects coming up where we would be looking to invest. But in the meantime, our focus is on the RAM sector, and as you see that while we promised to ourselves that we will be doing 55 and 45, that would be the ratio between RAM and corporate. We have gone to 57 to 57 to 43. That's a kind of a ratio we have seen. We are focusing on the RAM sector for the present till the capex cycle comes up. But I'm sure that in the current quarter, this is the time, it's a busy season usually. The Q3 and the Q4 are busy seasons for the banks and for the economy as a whole. We would like to see some revival and pick up in our sector also on our credit portfolio.
On the slippages side, retail slippages have jumped quite a bit, even QOQ and YOY. Wanted to understand which segment is this coming from, and especially on the unsecured front, if you could help, how much of it, percentage of unsecured loans contributes to your overall slippage?
If you're looking at my unsecured book, actually the slippages are not much. Unsecured book comprises of my personal loans and my credit card book. There is a very, very small growth in this book. If you look at the actual growth, it's about 0.3% growth in my credit card and my personal loan book. The slippage in that book is about 1.5, and the NPA is close to about 1.8%. Personal loan, we did see some a little bit of decline in the slippages actually, but on the whole, and as I've been already telling you, almost like 65% of my personal loan books are to the salaried employees and those people who have already got accounts with us. So unsecured book is not a concern for us. We are not growing very aggressively in that book.
And as far as, just wanted to add one point, that as far as retail slippages is concerned, that has not gone up. In fact, in absolute terms, it is going down. It was below March level in June, and in September also it is below June.
Yeah. So just to give you the numbers, right? I mean, September 24 is 1.1%, June was 1.47%, and March was 1.44%. So actually, it's gone down.
Ma'am, if you look at my total slippages of 5,700 or whatever we are talking about, and 1,600 and odd is the only my actual slippage. And the remaining has come from a big account that all of us are aware of. So my actual slippage is about 1,600 crores only.
Lastly, what's the exposure you have to FTNL?
Exposure will not discuss here.
We'll just discuss it. Yes, ma'am.
Yes, my name is Subhana Sheikh and I'm from NDTV Profit. I wanted to take that question further. While overall slippages have risen, your credit cost is also rising gradually, but I see that that's happening across banks. Just wanted to understand over the years asset quality of most banks have improved. Would you say that this is the last leg of best NPAs that we could see?
No, ma'am. We are very positive. Actually, we are not going to see any further slippages. It was a one-off case. All of us understand this big NPA that has fallen, and that's the reason that the slippages, the credit cost, everything has become a little topsy-turvy. Otherwise, the kind of steps that the bank has been taking over the years, you must have seen a decline. In March 22, we had an NPA of 11.11 and we are today at 4.34%. So that's the kind of activities that we have done. We have taken lot many steps with regard to curtailing my NPA, whether it is slippage management or recovery in my NPA books. We have got a multiple pronged approach to reduce both the things. If you look at my slippage itself, the underwriting skills and the way we underwrite, the way we pick up our project itself has changed over the years. You must have seen the 2000, the AQR era and the present era. It's completely changed. So we are quite positive about what's happening. It may be a one-off blips that come in the market, but we are fully prepared for those kind of blips. And then you have seen that the recovery is also good, the slippage management is also okay. I have in fact put more than 600 people specifically for looking at the slippage management and the recovery part of it. We created certain verticals in the bank which looks only at these kind of things. So there are lot many things happening across the sectors, and I don't see any further decline in any of my slippages or in the NPA part of it.
Ma'am, I just want to take forward this point you made about letting go of some of the large corporate exposures, which is quite unlikely for a bank like Union. You've been quite aggressive in the past on corporate exposures. So what sort of portfolios were these? How fine was the pricing here? And if you could sort of help us understand who were the people who picked it up and things like that.
Ma'am, before Edie answers the question which I let go or something like that, let me just take you back to my opening statement where I say that I will not, compromising my top line, I will not grow on my top. Compromising my bottom line, I will not do my top line. That's what I said in the very beginning. And with the, interest rates not picking up to the extent that what we are looking at, I have to let go of certain things. So it's just a prudent banking that we do. We are not, chasing, the top line, and we are very much, if you look at my bottom line, it's, it's done very well. We have tried and kept our NIM to the whatever we have spoken about. The ROE is very comfortable. The ROA is also risen to a comfortable level. My CAR is also, at the best levels now. My risk-weighted assets also, if you look, it's improved from almost 76 to 71%. So when I'm looking at all these things, I think we are on the right track. But if you want to specific as to what I let go,
I cannot give the names, but more or less it is public sector undertakings.
Public sectors and NBFCs.
So which means that there is still that pricing related issue.
It is there.
It is there.
Yes.
And I also want a clarification on the other point you made, ma'am.
Ma'am, it's not just the PSUs that we are looking at. We're just looking at competition, as I said, the capex is not revived. So, the basket that is available to all of us is, getting smaller. So naturally there would be a lot of competition. So naturally there will be a lot of war on the pricing. So we let go. We concentrate on something else, like what we did. Concentrated on RAM, tried to increase it, and did better in recovery, did better in slippage management. There are other things that the bank can look at.
And this 11 pips impact you've seen in NII this quarter because of the
Penal
penal
charges,
charge.
right.
Is it a one-off? Do you expect it to roll over for the rest of the year also, or you've absorbed
It's going to
all?
happen. It's going to happen. See, it started hitting our balance sheet from 1st July 2024 onwards. So it's going to be a normal practice where Now we cannot consider anything as penal interest but penal charges only, which will go into my fee-based income rather than my interest income.
Okay. And on the retail side, ma'am, you mentioned that that's where you're seeing better opportunities. But then if we were to go to market for a new car loan, there are rates starting at 9.05. It goes even below 9. And this is coming from PSU banks itself. Private banks are charging a slightly higher rate today compared to PSUs. How do you see pricing favorable for you in the RAM segment, ma'am? Because that's your home loan rates have once again gone back to 8.30 or 8.25. Where do you see pricing settle at RAM?
No, pricing is it's all EBLR based, the repo linked rates. So, it will settle at the rates wherever the repo is. And a little bit of, if I'm a more efficient bank, my operational expenses are much lower, I would be able to give a better pricing then. So, but if the rate cuts are coming in, then it will be coming down further. But let's hope and see what's going to happen on the repo rates. Yeah, and one more thing that ED is trying to flag off is we are not just giving, you are not just a customer for my home loan or just a customer for my car loan. We have got this concept of bundling the product and the relationship that we have built. So we do have a matrix in the bank which says that if you have been, banking with me for so many years, you have been a good customer, your civil rating is so much, then I look at all this matrix and give you a better rate. There are not many things that we look at. It's just not that.
Favorable for you?
Of course, yes, RAM NIM is favorable.
Thank you.
Yes.
Really from
Yeah.
Business Standard, ma'am, on the two sides. One is on the, sir spoke about that is the pressures will continue till the deposit rates cool. With the kind of a moderation that we have seen in the credit, you see the pressures incrementally coming down. And is there any change in your guidance based on that one for the credit growth overall? Though you have given 11 to 10, are you sticking to that or you are likely to have a revision?
Really, I am not going to change my stand. We have taken a stand in the beginning of the year. But we will look at, the credit revival. If it happens, then I will come and, look at better, credit opportunities. And with regard to deposit growth, I said 9 to 11%. We are looking at that kind of a growth and we will keep to it. But I am open for, changing my stand to the better and not to the lower end.
Do you see scope for deposit rates to rise because, the competition for deposits still persists. So how much do you think rates could go up from here?
We are already, I feel, at the higher end, right? We are already on the higher end is what we feel. See, you should understand that in the, where the interest rates are high, deposits generally, are coming down. The people do not come to the deposit angle. There are better opportunities in the market, like the stock market, the FNO. We've all heard about those stories, and that's how it's going to happen. But I think it will normalize after some time. People will see the need or where to focus on, where to keep their money. So we are also taking a lot of steps. As I said, we are in a project called the Leap, where our existing customers who have left the bank, who have reduced the rate, reduced their relationship with us, we are tying it back. We are going back to them. So there are so many such activities that the bank is doing. I told you 122 branches are being opened. All these activities are only going to strengthen my relationship. Because as a public sector bank, I already have a well-built network of branches. And if you look at the growth area that we are talking about, even the budget talked about, going back to the rural centers. And I have a very strong roots in the rural centers. So these will all help me, bringing back my deposits actually.
Yeah. Joel Rebello from the Economic Times. I'm sorry if this question has been answered. You also have 50% rise in treasury income this quarter. In the context of the rule change which happened, which was implemented in April, where did it, because I think the profits were being booked and it used to go in the profit and loss now was supposed to be taken in the reserves. If you could explain how this.
Joel, that guideline that came up did not affect us, okay, not to that great extent, but it was very, I can only tell that it was a great hard work done by the Treasury Department that we have seen a good rise in our profits from Treasury. Anyway, Bhatt is there to answer.
Explain
Yeah.
how did you all account for it?
From 1st April onwards, RBI changed the accounting guidelines in
But
treatment
would you
of
come in
the...
the front a little so that they can see who's answering?
You can come here, this side.
Yeah, come here, Bhatt.
RBI came out with the new guidelines to be implemented from 1st April in respect of valuation accounting of the investment. Accordingly, bank has effectively done those transactions from 1st April onwards. While doing those transactions, bank taken into account futuristic view of the market or interest rate outlook. So accordingly, the positions were developed in various segments. So accordingly, after the 1st April onwards, yield has moved from 7.05 to 7.25 in the first quarter, and it cooled down to 6.95. And because of this interest rate outlook, Treasury has taken a positive view into futuristic view of the market and taken the position in the trading books and booked the profits partially during the June quarter. In the September quarter, when Federal Reserve cut the interest rate by 50 basis points as against the 25 basis points, we could able to book the entire profit, and that has resulted into increase in the trading income, which otherwise in the normal course would not have happened. That is the futuristic view that Treasury has taken with the approval of the investment committee, and that has generated a substantial trading income in addition to MTM gain of 190 crores. And in the coming days also, market views have been taken positively because of the futuristic market outlook and indexation of the bonds and crude oil prices. Various factors are taken into account, and positively we will take a futuristic view for the next 6 months, and accordingly we churn the portfolio and generate the income whatever the targeted, which is 20 to 25% year-on-year growth.
On mark-to-market gain, this is the
Actual profit booked in that. Out of that, only 189 crores is the mark-to-market gain. That will be reversed on the next quarter, and accordingly, depending upon the market condition, that can be taken a view by the Treasury with the approval of the investment committee, and accordingly profit will be booked.
Sir, so if you book a profit, you can directly take it into profit and loss. Is that the rule?
Yes.
Is that the difference between the previous regime?
Yes. Any doubt?
This is the doubt.
Because earlier, whatever the...
what is the difference between the previous regime and this regime?
Yeah, whatever the available for sale, whatever the transaction is there, that will be directly taken into account in the P&L account. Now that will be taken in the AFS reserve. Unless you book the profit, then only it will be taken in the profit and loss account.
So you all basically booked profit?
Yeah, we have booked partially profit to generate income as per the market expectation and futuristic view of the liquidity condition.
Thank you. Ma'am, another question, sorry. Margin outlook. Margins have been pretty weak this time, year on year, if you look at it. Deposits rates are, there's competition. So is there anything you can tell us on the margin? How do you look at it?
We had a good discussion on the NIM actually. So I just want to tell you that yes, NIM we understood the problem in the very beginning. That's in the last quarter of FY24, and that is how the guidance for 2.8 to 3%. That's what we had given. While the cost of deposits has gone up by about almost 35 bips or YOY. Yeah, and yield on advances has actually reduced by 11 bips over the last year. And this is because of, I can tell you, apart from the growth in advances have been a little muted, but main problem was with regard to penal charges and dummy ledger recovery. Those are the two issues, and that's how 14 bips has impacted the NIM.
You said dummy ledger recovery.
That is from the recovery that we get from, NP.
What is the expectation for the rest of the year, ma'am, margin-wise?
Margin-wise, we are at 2.823, that is what we are looking at. We would hopefully want to, go back to the number 3 that we've always been focusing on.
MSME loans have fallen in terms of growth below 6%. This is again a trend which we've not so used to seeing in Union Bank or most of the banks. Even private banks showed better than previous quarter growth. You're seeing stress build up there. Why did you decide to slow down in MSME?
No, I think the first few months of the half year were relatively weak in terms of the new sanction and disbursement in MSME. But I think from the middle of the August, we are seeing good sanctions happening for the new limits. And that's why even if you look at the QOQ growth, I think it's a good growth, around 2.5% of growth is there in MSME. And so we have focused on around 29-30 clusters of MSME across the country. And the traction is there currently, and we believe that the new pipeline of disbursement and sanction should be good in the second half of the year. But to your question on the stress, I don't think there is any new stress that is emerging in MSME. If you look at our overall NPA, gross NPA number in MSME, it's quite low now compared to what it used to be earlier. And even the delinquency rate, which actually reflects the stress level, is quite low and manageable.
What is it at, sir?
It will be around 2.5% in MSME.
Further to add to what ED has said.
2.2. It's 2.2 in MSME.
Yeah, further to what ED has said, we have bought out lot many MSME schemes to revamp the MSME, and we have also launched certain campaigns to see that, the MSME book is, built properly. Bank has got a very unique product called the Union Nari Shakti, which is only for women entrepreneurs. And for the last 2 years, we have built close to we have created about 58,000 women entrepreneurs. And about 7,000 crores have been dispensed for this. And we also started the cash flow based lending, that is based on GST returns and things like that. We've also introduced lot many digital journeys in our MSME, which is totally, driven by the rule engine. So there is no question that this will be defaulting in the near season. We are also, opening 5 Nari Shakti branches in this quarter, so that, many more women entrepreneurs can come up. As ED has already said, cluster schemes have been developed. The country as a whole has got close to about 3,800 clusters. So we have identified many clusters, and we give better interest rates, better collaterals and all those things to see that the cluster financing happens. And we've also identified about 51 hotspots in the country, from spiritual tourism to many other things that's happening across the country. And if you can see, we have also opened Union, MSME first branches, which are located in these locations under the clusters or the hotspots, where we can drive the MSME advances the way the bank wants to do. Across, if you look at the public sector banks, we are the 3rd largest in MSME, and we hope to increase these numbers. We also understand that MSME is the backbone of the country. So we will be taking many steps in the current year, in the current few quarters, to see that we get back from our 5.72% whatever growth that we have shown in this quarter, to have at least a double-digit number in the next quarter onwards. Thank you.
Madam, coming to the NBFC's part, RBI has been talking about it. Now it took a very stern action on those 4. Do you have exposure to any of these 4, and then have you begun any dialogue with them?
See, this has come a couple of days back actually. We have a quite a small exposure with 2 of the entities. I think we will be having, going forward, we will be having that also with them, and actually we will be taking care of it.
Would you allow them to draw down till the time that the ban is there?
There is nothing left to be done.
Nothing to. And no fresh sanctions are also in the pipeline.
That is a board to take a call, not here to discuss. But we will look at it. See, every NBFC had this one. Again, it was in once they comply with that, RBI gives the things, whether they will be having a liquidity to meet the commitments during that period. That only we have to look at.
We not ban them from drawals, from the lines that they have.
No, we don't have any lines. It's
No, but RBI is not.
No.
Internally,
yeah.
not whether you are.
Yeah, they have not stopped that.
You also have 100 billion rupees approval for raising funds through equity and debt. When are you planning to tap the market for these funds?
Ma'am, but as you see, my car is also, good. All the other ratios, the bottom ratios are looking good. I'm not going to look at, raising funds at this quarter, but we will have a look at it during the next quarter. Thank you.
That is for the entire one, or it will be tranches?
Depending on the market, if I want to draw the whole thing also. Last year I had 8,000 crores and I did it in 2 tranches. So let's see how the market is behaving, and accordingly I will take a stand.
Will it also be to ensure that your largest shareholder comes down to the level of more complying with SEBI norms? Would that
SEBI
also
norms we have already complied, ma'am. SEBI norms said 75 and I am below 75 right now. Yes, so that's been taken care. So norms are okay, I am okay with it. It's only for business needs and expansion. If I need, I would like to come back to the market and raise it.
Funds will be suffice to what medium term, 2 years, 3 years, the current level, capital adequacy, and then the retained earnings for FY25 should take you to?
How long it can take care of us? My CRO should reply to that.
That also depends upon what kind of growth happens in the market. So looking at the current lending growth, I think we are fine with at least for next 1 year. And if growth is there in the market, overall market, then we will need money, and that is the plan. That would be our plan.
So thank you. With this, we come to an end to the press conference, and we haven't taken any offline queries. Thank you.